Before you get tricked by someone telling you the interest rates are in the fours and blah, 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 I'm about to show you what's going on in the market on the back end that's driving interest rates, what interest rates are as of today. But first, if that sounds good to you, you're in the market to buy a home or refinance, be sure to keep following this channel because you need to be in the know and not be misled because of how marketing can work through the mortgage industry. With that being said, let's get to the update. So let's look at first what is driving the mortgage rates. So this is the bond market that's behind interest rates for mortgages. And you have to understand this chart to have an idea of where things are going. As you can see, the trend is upward. That's a good sign because the higher on this chart, the better it is for mortgage rates. It's never a straight line. We have ups and downs. And as a matter of fact, like we had yesterday, you see this little lock there, they told us to lock. The Jerome Powell came out and he sounded good about the economy again. Now, I'll dig more into that later as to why things like this are happening, in my opinion. But here we go again. It pushed us down below the 25-day moving average, which could have been a warning sign. But today, we're already bouncing back up above it. Now, the reason we're having some of this bounce up is the strike that's happening on the ports. But I'll look into that again here later on. But I want to show you guys what's going on in the bond market here. So as long as we close above this line, we'll be pinched in pretty well here, but I still don't see this 101.52 being that much resistance. We've already been above it. We'll break through again and continue the trend to better interest rates for mortgages. Now, we all know what happens with better interest rates. We have limited supply. So it's something else to be aware of. This is the 10-year. Now, they don't go hand in hand, but the 10-year Treasury broke below its 25-day moving average again, which is also another telltale sign. The lower on this chart, the better for mortgage rates. So we're trending down, we're breaking down below, so all good indications. Now, I always like to dig into what rates are because so many people send out letters and they're just blowing smoke, right? If you've been around for a bit, you know I just say it as it is, and this is where we are at. This is a 100% no money down VA purchase, 700 credit, $400,000. You're still getting 6.625 with a little bit of a cost. 6.625 with a little bit of a cost. You'll have the APR for the 6.625 will probably run 7.5 to 8. It all depends on closing costs where you are, and it's going to be relatively close here on the next one, and then the rates just start climbing. So I'm not going to dig into those. But that's where we're at right now for purchases. Now, I've had a lot of people ask about points. I never recommend buying points right now because I just showed you the trends. Here is a refinance on a VA loan. If you refinance that VA loan, you're getting 5.6. These are called IRRRLs, interest rate reduction refinance loans. Why would you pay $4,000 or more, most likely, to get a 5.625 when you could potentially wait 7 months to a year, make sure you have the equity to cover the closing costs because it's so much cheaper. It is significantly cheaper to refinance a home than it is to purchase and get it right there. Like it's super simple. So anytime you're getting any type of seller credit, use it to help the closing costs. That's my recommendation, especially right now where we are in the market. That is your quick update. Now let's dig into what's going on and why things are happening in the market right now and why it's kind of wavy. All right, so I said at the beginning, I mentioned about the fact that we had that big dip yesterday in the bonds because Jerome Powell came out and said that, oh, jobs are looking good. The economy is looking good. Well, I mean, if you're a bit like me, I'm skeptical on a lot of things because I don't see now hiring signs at fast food restaurants. I don't see a lot of jobs being out there like they keep claiming. I question it, and I think you should too. I think this is a political move, personally. Everything that the Fed has been doing for a while now has been political. They've been knowing they're supposed to be separate, but that is not the case whatsoever. That's also why I feel we started dropping rates last time, because now it makes people perceive the economy is doing better. Equities typically go up a little bit, so people think that they're doing better as well, but ultimately it's going to lead to more inflation and so forth. But here's where we are at that, right? That's why you have to question it. The jobs numbers came out today, the JOLTS numbers, and they were weak, like really weak. Then we had the strike today for the guys at the ports. I'm sorry, I can't remember the name of it right off the top of my head right now. But that's going to have a trickle down effect that a lot of people aren't seeing. 50% of our imported goods come through these ports on the East Coast and the Gulf and everything else. This will have an impact. This is why all of a sudden you're seeing equities go down today and people driving into bonds because of security. That's how it goes, that they always cycle back and forth. And this will have an impact on what's going to happen in the future because it could have an impact on jobs. And this is why I've been saying for a while that we have to be open-minded and understand that a lot of things that we're being told isn't always what it is, right? There's always fine print. So you got to look into things deeper. And as you know, right, it's all about learning more opportunities, learning more about things so we can get better and honestly have that thriving middle class. But with the mortgage part, look, the mortgage is a great tool. I showed you guys how refinancing is better off right now than it is to buy down points. So this is the approach you should be looking at. And if your loan originator isn't showing you things like this, you're the one who's going to suffer, right? Because this is what it should be. It's not just something to buy a home. A mortgage is a complete tool. It's actually a way to build wealth. If you're working with the right person, they can show you how to use it. So I hope you got a lot out of this. And if so, please be sure to keep subscribing to this channel. And I will see you on the next one.